This accounting mini lecture provides a brief summary of inventory cost flow. Okay, in the chart that we see here on the screen, we see that for every accounting period, we are going to begin with some beginning inventory balance. This is basically the inventory that we have sitting on the shelves or sitting in the warehouse at the beginning of the accounting period. During the period, we are probably going to make some additional purchases from our suppliers. That is represented by the net purchases. If we take the beginning inventory plus the net purchases, this gives us our merchandise available for sale. Sometimes you'll also see this called goods available for sale. This is basically everything that we had available to sell to our customers during a given accounting period. Now, at the end of that accounting period, we basically have two options for everything that was sitting in merchandise available for sale. Either we sold the goods, and in which case the cost should be included in cost of goods sold, or we did not sell the goods, in which case we still have them, and that should be included in ending inventory. Okay, so we have two choices for every item. We either sold it or we didn't. If we sold it, we need to put the cost into cost of goods sold. If we did not sell it, then that cost needs to remain in our ending inventory account. Now, let's take a closer look at how this actually impacts the financial statements. Now, what we see here is basically just an expanded version of what we saw on the previous page. Let's start with period 1, okay? We see our beginning inventory plus our net purchases gives us the merchandise available for sale. We then split that into two, the portion that was sold and the portion that was not. The portion that was sold, again, those costs go into the cost of goods sold account, which is an expense account on the income statement. The items that were not sold, that cost is going to remain in ending inventory, which is a current asset on the balance sheet. Okay? Now, the significance of being able to see period 2 here is what you're going to notice is the ending inventory from period 1 automatically becomes the beginning inventory for period 2. And then we basically go through the exact same cycle. And you can see that the ending inventory in period 2 would then become the beginning inventory for period 3. Thank you for watching this lecture on inventory cost flow.